Good morning, everyone. Thank you very much for joining me. This is the morning market review, and it is Tuesday. It's the 7th of November. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to go ahead and bring up the disclaimers. We'll start off with the high risk investment warning. I'll keep that on screen for a few moments. Hey, James, good morning to you, and welcome as always. Hey, Raj, good morning. Thank you very much for signing in, much appreciated. Hey, Howard, good morning to you and welcome. All right, let's bring up the next slide, which would be the market commentaries disclaimer. Okay, and just our references, MarketScope 2.0 and TradingView.com. All right, let's take a look at TradingView, and we'll start off with the real rate. My base case is that dominant candle is last week's completion of the reference candle reversal. It's pushed down. However, we are seeing some appreciation in real yield. I think that potentially sets up, hopefully, an opportunity for us. And the way that I want to view this is in terms of peak and trough analysis. Remember, what we want to do is we want to get an overarching feel for the direction. So let's just assume that the reference candle is a dominant move in the real rate. Well, then we've kind of got the movement like this. We've got the movement like this, and potentially this becomes a rally in the downtrend. So we can see if we can take advantage of some sort of bounce here in the real rate. So you can see that the working action is that the reference candle is dominant, but some blue here gives us the opportunity of a rally in a downtrend. If that is the case, let's take a look at the US dollar and see if there are potential opportunities for us. So we'll go through to the US dollar, and the US dollar actually looking quite strong on the day, but we are in zone 3. Okay, we are in zone 3. We did have that expansion in volatility to the downside. Let's just go one level up. And again, we're assuming here that the dominant force is last week's movement down. Really, the non-farm payroll setting the scene there. And then we've got some sort of movement up into the US dollar. Let's just see if there's going to be resistance areas for us to keep our eye on. So if we go down to the hourly, the hourly looking very, very strong. As long as we've got the stochastic staying in that upper quintile, we've got the momentum working against last week's reference candle reversal. What we would need to see is we would need to see some sort of cross down, in the US dollar in the exponential moving averages, and some sort of cross down here in the stochastic, and then the stochastic making its way towards the lower quintile. If we see that, then we are aligning with the zone 3 position of the US dollar, and we are aligning with the sell down last week, that reference candle reversal. It's, to me, fairly tricky here, because there's no doubt that there is a strong start to the greenback today. And what we can do is perhaps just add in a fib to see where the market may be looking for corrections. Let's just see if we put in. So we're right at the 62% overlaying with the R2. Let's just see if there's some sort of confluence here. So we've got kind of a 38% on top of a 62%, looking at the two different legs down. So what I would look at this morning is if this R2 acts as some sort of resistance area. If it breaks through, okay, then the dollar is acting exceptionally strong, and it's moving counter trend. That really makes I think quite complex from our point of view. From our point of view, remember, the primary movement down is the candle to the downside. The candle to the downside, primary movement down in the real world. Taking a look at the US dollar, last week's sell down, this big long candlestick, primary move down. Now it looks like we're getting this sort of rally into that downwards momentum, and we're going to see if it holds in that zone 3, and we just want to see if this R2 acts as a barrier. Now let's assume that it doesn't. Let's assume that the US dollar carries on moving towards R3. That means there's a lot of money. It's a lot of money moving into the dollar as a safe haven. That would suggest to me that we have a risk-off day today. So I think we're at a important level that we want to see if is a key reaction level. So keep an eye on this R2. I think the way that we can look at it is we've got a support here that's turned into a potential resistance. So here's the support turned into the potential resistance. We've got the pullback to the 62%, and of course we've got this R2 level here. So a confluence of resistance as we are in zone 3, but really we need the momentum to yield, and if that momentum doesn't yield, then the day carries on to risk off. If we get the momentum yielding and we get the movement down here, then I think we're rotating slowly out of the safe haven aspect of the market, going more to a risk on. Let's just take a look and see how euro is lining up here. Let's go through and bring up euro US dollar. Okay, just bear with me while the chart downloads. Whilst we're waiting for that, let's just go through to the daily chart over here. Daily of the real rate, okay, and potentially looking for something like this 1, 2, 2, 3, okay, and then perhaps some sort of movement like this, just to get some sort of respite. Let's take a look at the euro US dollar. All right, so you can see that the complex reference candle, we spoke about this yesterday, completed. We want to see if the RSI can move above 50 and hold. Right now, that 30-week exponential moving average is what we can see here is that the 30-week exponential moving average is acting as a resistance level, but because we've got this movement up in the euro, I'm just wanting to see if that's the dominant movement up. We're getting a bit of red, okay, and then we want to see if we can get the movement here Okay, is there an opportunity of a dip in upwards momentum? Okay, so that's kind of what we're looking at in terms of euro US dollar. If we take a look at the daily chart, we've moved into zone 1. Okay, and there's a bit of red in zone 1, so potentially setting up the dip in the uptrend. Let's take a look at this in terms of the hourly, and it's a mirror analysis, of the dollar. We've got a very strong momentum to the downside. We would need to see some sort of break here. In other words, when I say a break, a movement of the momentum out of the lower quintile. The S2 level is the obvious support level to watch. What we want to see if we get a crossover, a positive crossover in the EMAs there, a positive crossover in the stochastic there. Let's just see where we are in terms of the dip. We're about a 50% dip down. I don't see a price support turning, or a price resistance turning support here. So the confluence not quite as obvious as on the dollar. But if I go back to the US dollar, and we see that the US dollar does have this resistance, okay, at the R2, and that's a capital I, capital F, right? Then we want to see the S2 level hold in the euro US dollar, okay, and we want to see the two triggers and then the movement of the stochastic. So we're kind of waiting for the technical signals here. We don't want to predict. If it drops below S2, heading towards S3, then I would suspect that the US dollar is moving from R2 through to R3. Then we probably have that risk off day. This watermark, James, is not included in the platform itself. It's an external indicator. I'm not sure where I got it from. If you email me, I'll see if I can find it. I can't promise. I've had it for years and years and years. I can't quite remember where the watermark's from. Okay. Let's take a look at cable. All right. So again, cable, we've got this big, I think this is the dominant movement here. It's in zone 1. Let's just take a look at the weekly chart. Weekly chart also has the 30-week exponential moving average, which is acting as resistance. But again, this looks to be the dominant candlestick. In other words, a potential dip in upwards momentum here. Really, we would like to get that RSI above. We would like to get the RSI above 50. And if we just take a look at the hourly chart here, okay, you can see S1 acting as that resistance level. Let's just take a look. Okay, so about 50%, around about 50%. I'm just trying to see which is the most appropriate leg, or a 38. So there is a measurable pullback here. It really depends on that break in momentum. What we have is that the US dollar, if we just go back to that US dollar, we've got the US dollar momentum in the upper quintile. We've seen that the euro momentum in the lower quintile. Similarly, cable, the momentum is in the lower quintile. Okay, we need to see that break. We need to see the momentum start moving in that northeast direction. So two triggers here, okay? We've got this 1, 2, 2, 3. Now we want to see if we can get to the next 1, 2 here. We were looking for the crossover of the exponential moving averages. We're looking for the crossover of the stochastic, and then the stochastic needs to move in that northeast direction. At the same time, you'd want to see a mirror image in the US dollar. You want to see the US dollar moving down. Okay, so that's kind of how I see it in terms of the forex side. Howard, I'm not certain. I don't think there's a special with the TradingView platform. You can email me. I'll forward it on to a services rep. I am afraid I don't have a definitive answer for that. All right, let's just take a look at how the markets are doing. Oh, before we do that, let's take a look at gold. Okay, just bringing up gold. If the US dollar has this momentum behind it, what is happening with the precious metal? What is happening with gold? So here we've got gold. And gold really feeling the wrath of the higher dollar price. Again, it's pulled back into the lower quintile over here. It has crossed over, so we've got trigger 1. Okay, we would just need to get a second trigger off of S2. Let's just see where gold is. It's well, that's interesting. It's actually starting to show signs of weakness. It's moved relative strength wise. It's gone from zone 1 into zone 2. A little bit of a head and shoulders here on the daily. Again, what I would be looking at is to see if there is some sort of dip in the uptrend to take advantage of. I don't think we can predict that. We need to look at the reactions of the EMA. Do we get a cross up of that EMA? Do we get a cross up of the stochastic? And does that stochastic move towards that 80 level and hold? So this morning, the number one, I guess, trigger would be the break in the momentum, the break in the stochastic. The stochastic looks very strong in terms of momentum. Specifically, we're referencing the upper quintile for the US dollar, the lower quintile for the majors, and for gold. Do I think the correlation between the US dollar and gold is breaking down? Naren asks. I think, Naren, in the long run, I don't think that it will break down. I think in the longer term, or the medium to longer term, I think it will hold. The correlation being that gold moves opposite to the US dollar. Ever since the outbreak of the conflict in Israel on the 7th of October, there has been a breakdown in that correlation. However, it looks to have reasserted some degree. You can see that it's popped down at the same time that the US dollar has popped up. So it looks almost as if there is some sort of reconnection taking place. If there is some sort of reconnection taking place, then of course it's critical what happens with the US dollar. But if there is some sort of breakdown in the correlation, my expectation, subject to correction, is that it would be temporary in nature. We'll have to keep an eye on that for sure. Let's just take a look at some of the indices. Let's take a look at the S&P 500. All right, so the S&P 500, again, I think last week's movement is the dominant movement. Let's just, it's really pushed right up above that 30-week exponential moving average. The 30-week exponential moving average is moving up nicely. The downwards trend line now is the next objective. We really want the price to move above this trend line. The trend line is measuring this lower peak, lower trough, lower peak, lower trough. It's measuring the, I guess, the momentum behind that. If we can get above that green slope, the downsloping green trend line, then that, of course, is a bullish development. You can see that the RSI here is popping above 50. Now, this is the key. We would need to see a break in the dollar momentum. And I think if we see a break in the dollar momentum, I think that we do get some sort of push up to the upside here. We're in zone 1. And if we go through to the hourly chart here, what we really want to see is if we've got this 1, 2, 2, 3, and then if we get the next leg up. Okay, again, I don't want to predict that. We want to see the crossover of the EMAs. Okay, we want to see the crossover of the stochastic, and then we want to see the stochastic make its way towards the upper quintile. Let's just take a look at DAX before we sign off here. Remember, DAX on a relative basis is weaker than the American indexes. Let's just see how DAX is setting up. It should be moving at the moment. We're 2 minutes into the cash open, and you can see that the S1 level here is holding as a support level. Again, keep an eye on the US dollar. The US dollar is the safe haven of choice. Generally, if we get a break in the momentum of that US dollar, okay, then potentially we can get a crossover of the EMA and a crossover of the stochastic. And if we get a crossover of the EMA and a crossover of the stochastic, then we want to see the stochastic make its way to the upper quintile. There is a relative weakness here, whereas the S&P is up in zone 1. We still need to get into zone 1 for the DAX. So we need to see something like this. And again, don't predict it. Just see if we get the support level holding, this S1 level holding. Give it about an hour or so. We're getting all pent-up orders that are executing now, as well as the algorithms kicking in. So that's going to be quite an interesting next hour, just to see if we do get some sort of support kicking in. All right, are there any questions? Any questions, go ahead and type those in. Tomorrow we will have an extra webinar. We'll do the crypto minute. Okay, I don't see anything coming in, so let's conclude at this point. Thank you very much for joining this morning. Much appreciated as always. Have a great day. Yeah, I think we need to wait for those crossovers, Howard. The market is counter trending at the moment, making it quite tough. Yeah. All right. So let's see if we get the crossovers in the EMAs, the crossovers in the stochastic. Quite a tricky start to a Tuesday morning. All right, guys, let's wrap up there. Have a fantastic day ahead and a fantastic evening. We shall chat tomorrow morning. Thanks very much, guys.